still see over here, we're still dealing with pro-forma consolidation journal entries. But the period now, or the phase of this, actually just changed a little bit. We previously dealt with the at acquisition, so now we just moved a little bit forward, dealing with the since acquisition to beginning of year. Now, if you remember earlier, in step 2, we drew a timeline to help us, and this is where it comes in handy. So the since acquisition to beginning of period represents everything from the date of acquisition up until the start of our current year. Now, what we're interested in here is the profits and the movement in reserves over here that we need to now go and allocate to our non-controlling interest. So, how do we go about this? We can see that, looking at our scenario, that the start of our current year retained earnings amounts to 120,000 Rand, and at date of acquisition it was 50,000 Rand. So it means that profits went up. Now, if profits went up, we need to allocate then more to our non-controlling interest. How do we allocate more in terms of our journal-wise? Well, this is how we do it. To increase our non-controlling interest, we're going to credit non-controlling interest. Just take note that within the test or exam situations, you're going to write this full out, non-controlling interest as in full sentences. So we're going to credit non-controlling interest in our statement of financial position, and we're going to then debit, well, our retained earnings because it relates to the prior period's profits. So debit retained earnings, and this is flowing through equity. Well, what about the amount? We said it's going to be the movement, so we know that in term we're going to reference this as working 1 now. So under working 1, it's going to be the beginning of the year, which was 120, versus at acquisition being 50,000 Rand, giving you a profit of 70,000 Rand. But we know that we only have partial control, so we only own 30,000 out of the 40,000, giving you 75% control. The other 25% relates to the non-controlling interest, which is what we're going to be taking into account here. So the 70,000 times 25% is going to give you 17,500 that we need to now go and allocate to our non-controlling interest. So we're going to, just to make that separate, debit then the 17,500 and a credit to increase our non-controlling interest, 17,500. The reference for then this journal will be P1. Oops, sorry. Yes, P1. Here we go. Awesome. That's how you allocate profits to non-controlling interest relating to prior periods.